If you are collecting Social Security right now, or if your spouse is, I need you to stop what you're doing and check one thing before this video goes any further. Log into your Social Security account at ssa.gov. Look at your current monthly benefit amount. Now ask yourself honestly, do you know with certainty that you are receiving every dollar you are legally entitled to receive? Not approximately, not probably, with certainty. Most retirees cannot answer yes to that question, not because they are careless, because the Social Security Administration does not call you when there is money on the table with your name on it. It does not send a letter that says, you may be entitled to a higher benefit, and here is what you need to do. It processes what you applied for. And if you never applied for something you were entitled to, or if a law changed and your benefit was never recalculated, or if an error has been sitting in your file for years without anyone catching it, the money simply does not arrive. Right now, in June of 2026, there are at minimum 4 separate situations where a retiree who is already collecting Social Security may be receiving less than they are legally owed. 4 situations. Any one of them can be worth hundreds of dollars per month. Some of them involve retroactive payments going back to January of 2024. And the majority of the people who qualify for those payments have either not received them yet or do not know they were supposed to. I'm going to walk you through every single one of them today. I am going to tell you exactly who qualifies, exactly what the money looks like in dollars, exactly where the system has failed to pay people who were owed payment, and exactly what you do right now to find out if any of it applies to you. My name is Marcus Steele. I'm an enrolled agent licensed by the federal government to represent taxpayers directly in front of the Internal Revenue Service. I work with retirees on Social Security, tax strategy, and retirement income protection. And I want to be direct with you about something before I walk through these 4 situations. The Social Security Administration is not your advocate. It is a government agency processing an enormous volume of cases with a workforce that has been cut significantly in the last 18 months. The agency does not have the staff to proactively identify every person whose benefit may be incorrect and reach out to them individually. That responsibility falls on you, which means the retiree who never checks, who assumes the check is right because it has always arrived, who does not know what questions to ask or what laws changed, leaves money on the table every single month indefinitely. That ends today. The first situation involves a law that Congress passed in January of 2025 that changed Social Security for millions of public sector workers and their families, and that the agency is still in the process of fully implementing 18 months later. The law is called the Social Security Fairness Act. It eliminated 2 rules that had been quietly reducing Social Security benefits for public sector workers for decades. The first rule was called the Windfall Elimination Provision. The second was called the Government Pension Offset. Both are gone now, eliminated by law effective January of 2024. Here is who those rules affected. If you or your spouse worked in a job that did not pay into Social Security, a teacher, a police officer, a firefighter, a state or local government employee, a federal civil service worker hired before 1984, a worker in certain other public sector roles, and you also had a connection to Social Security through your own work history or your spouse's, one or both of those rules was reducing your benefit, in some cases by several $100s per month. In the case of the government pension offset, which reduced spousal and survivor benefits for people who had a government pension, it sometimes eliminated those benefits entirely. The Social Security Administration has paid $17 billion in retroactive payments to 3.1 million beneficiaries since the law passed. Those payments covered the benefit increases owed going back to January of 2024. For many retirees, that showed up as a lump sum direct deposit with no advance warning or explanation. But not everyone has been made whole. As of June 2026, the retroactive payment process is incomplete for a significant number of cases. A bipartisan group of senators sent a formal letter to the Social Security Administration in March of 2026, pressing the agency to grant maximum retroactive payments to surviving and divorced spouses going back to January of 2024. Some spousal and survivor claims have not yet been adjusted. Some affected retirees received a partial payment. Some received nothing. If you or your spouse spent any portion of a career in public sector employment with a pension that did not pay into Social Security, log into your MySSA account right now and compare your current benefit amount to what you were receiving before January of 2025. If the amount has not changed, or if you never received a lump sum payment, call the Social Security Administration directly and ask specifically about your status under the Social Security Fairness Act. The money owed to affected retirees is real. For some, it exceeds $14,000 per year in restored income. For surviving spouses who had their entire spousal benefit eliminated under the old rules, the restoration can be life-changing. The second situation involves a benefit that a significant number of divorced retirees are legally entitled to collect and have never been told exists. If you were married for 10 years or longer and you are now divorced, you may be entitled to a Social Security benefit based on your former spouse's work record. The divorced spouse benefit pays up to 50% of your former spouse's full retirement age benefit. You do not need to be on good terms with your former spouse. You do not need their permission or their knowledge. Your filing does not affect their benefit in any way. And if your former spouse has died, you may be entitled to a survivor benefit based on their record that pays up to 100% of what they received. The income thresholds and timing rules matter. You must be at least 62 years old to collect a divorced spouse benefit. You must currently be unmarried, and the benefit is only available if it would be larger than the benefit you qualify for on your own work record. The Social Security Administration pays whichever is higher, your own benefit or the divorced spouse benefit. It does not pay both. Here is what costs people this benefit. They do not know it exists, or they assume their former spouse has to agree to it, or they assume that because they have been divorced for 30 years, the marriage no longer counts. None of those assumptions are correct. If the marriage lasted 10 years or longer, the eligibility is permanent regardless of how much time has passed, regardless of whether your former spouse has remarried, and regardless of any agreement made between the two of you at the time of the divorce. A divorced woman who was married for 15 years to a high earner, who herself worked in a lower wage career, and who has been collecting her own modest Social Security benefit for years, may be entitled to a significantly higher benefit based on her former spouse's record. She may have been leaving hundreds of dollars per month on the table every month since she started collecting. The Social Security Administration will not contact her to tell her this. She has to know to ask. The third situation involves a specific category of benefit that most widows and widowers do not fully understand, and that costs surviving spouses real money in ways that are irreversible once the wrong decision is made. When a spouse dies, the surviving spouse is entitled to receive the higher of their own Social Security benefit or their deceased spouse's benefit, not both, the higher one. This is called the survivor benefit. What most surviving spouses do not know is that the survivor benefit has its own claiming rules that are separate from the retirement benefit rules. You can claim the survivor benefit as early as age 60. The retirement benefit cannot be claimed until 62, which means a surviving spouse who is 60 or 61 has access to income from Social Security that most people do not realize is available at that age. More importantly, the strategy of claiming one benefit first and switching to the other later is specifically available in the survivor benefit context in a way that it is not available in most other Social Security scenarios. A surviving spouse can claim the survivor benefit at 60, allow their own retirement benefit to continue growing at 8% per year until 70, and then switch to the larger retirement benefit at 70. Or they can claim their own reduced benefit early and switch to the full survivor benefit at their survivor full retirement age. Which of those two paths produces more lifetime income depends on the relative sizes of the two benefits and the surviving spouse's age and health. Most surviving spouses make this decision once based on incomplete information in the months immediately following the death of their spouse. They are grieving. They are overwhelmed. And the Social Security Administration representative processing their claim is not required to model both strategies and explain which produces the higher lifetime income. They process the application that is submitted. If you are a surviving spouse and you claimed your benefit without having both strategies fully explained to you, it is worth having someone look at your current situation. Depending on how recently you claimed and your specific ages and benefit amounts, there may be a path to a higher monthly income going forward. The fourth situation is the one that surprises people the most because it involves money the government collected from them, and in many cases has been sitting in a correction queue since 2025. When the Social Security Fairness Act passed and the retroactive payments began, the agency correctly identified that receiving a large lump sum retroactive payment creates a tax problem. A retiree who receives $15,000 in back pay in 2025 that covers benefits owed from 2024 and 2025 has that entire $15,000 land on their 2025 tax return as income in a single year. That can push them into a higher tax bracket, increase the taxable portion of their Social Security, and trigger an RMAA Medicare surcharge based on the inflated 2025 income 2 years from now. The IRS provides a specific remedy for this situation. It is called the lump sum election, and it is available for Social Security retroactive payments under Internal Revenue Code, Section 86. The lump sum election allows you to calculate the tax on the back pay as if it had been received in the years it was actually owed rather than in the year it was paid. You report it on your current return, but you compute the taxable portion using the prior year's income figures. For most retirees who received a meaningful retroactive payment, This election reduces the tax owed on that payment significantly. The election is not automatic. It requires a specific worksheet. IRS Publication 915 walks through the calculation, and it requires someone who understands both the Social Security taxation rules and the lump sum election mechanics to do it correctly. Most standard tax preparation flows do not flag it automatically, which means the majority of retirees who received a retroactive payment in 2025 likely paid more tax on it than they were required to pay. If you received a Social Security lump sum payment in 2025 and you have already filed your 2025 return, you have 3 years from the filing date to amend the return and claim the lump sum election if it would reduce your tax. If you have not yet filed or are planning for next year's return, make sure whoever prepares your taxes knows to evaluate the election before the return is finalized. Let me now tell you exactly what to do for each of these 4 situations, because knowing they exist is only useful if it produces action. For the Social Security Fairness Act retroactive payment, log into your MySSA account at ssa.gov today. If you or your spouse had public sector employment with a non-Social Security pension, compare your benefit amount before and after January 2025. If the amount has not changed and you believe you were affected by the WEP or GPO, call the Social Security Administration at 1-800-772-2113 and ask specifically about your status under the Social Security Fairness Act. Ask whether a retroactive payment was issued on your account and whether any adjustment to your monthly benefit is pending. Write down the name of the representative you speak to and the date of the call. For the divorced spouse benefit, if you were married for 10 years or longer and are now divorced, call the Social Security Administration and ask specifically what benefit amount you would be entitled to on your former spouse's record. You will need your former spouse's Social Security number if possible, though the agency can sometimes locate the record with your marriage information if you do not have it. If the divorced spouse benefit is larger than your current benefit, you can file to switch. For the survivor benefit strategy, if you are a surviving spouse who claimed your benefit within the last few years without having both claiming paths fully modeled, contact the Social Security Administration and ask them to show you the benefit amounts available under both options. Bring a written record of both your benefit amount and what your spouse was receiving before their death. A benefits counselor at your local area agency on aging can also help model both scenarios for free. For the lump sum election on retroactive payments, if you received a Social Security retroactive payment in 2025, pull your 2025 tax return and look at how the back pay was reported. If it was all included as income in 2025 without the lump sum election being applied, contact a tax professional who is familiar with IRS Publication 915 and ask them to evaluate whether an amended return would reduce your tax liability. Before I close, I want to give you something to take with you. I put together a free checklist, my 2026 Unclaimed Social Security Benefits Checklist. It covers the Social Security Fairness Act, verification steps, with the specific questions to ask when you call the agency, the divorced spouse, benefit eligibility criteria and the filing process, the survivor benefit dual strategy comparison worksheet, the lump sum election evaluation guide with the publication 915 worksheet walkthrough, and 3 additional smaller benefit categories that retirees commonly miss, including the earnings record error correction process and the delayed retirement credit verification. Every item includes the specific action and the contact information. To get it, go to marcusgravestacks.com/checklist. The link is also in the description. Here's what I want to leave you with. The Social Security Administration has paid $17 billion in retroactive payments since the Fairness Act passed. $17 billion to 3.1 million people. Most of those people did not know the payment was coming until it appeared in their bank account as an unexplained deposit. And the payments are not finished. Some spousal claims have not been adjusted. Some surviving spouses have not received the correction they are owed. Some divorced retirees are still collecting a smaller benefit than they are entitled to because they never knew to ask about their former spouse's record. Some retirees paid more tax on their retroactive payment than the law required because the lump sum election was never applied. The money exists, the rules are written, the processes are in place. The only thing standing between a retiree and the benefit they are owed is whether they make the phone call, log into the account, or ask the question. Make the call, check the account, ask the question. Send this video to one person you know who is over 65 and collecting Social Security, especially anyone who worked in public education, law enforcement, state or local government, or any public sector job with a pension, and especially anyone who is divorced after a marriage of 10 years or longer and is collecting on their own record. The odds are meaningful that one of the 4 situations I described today applies to them and that nobody has told them. That is what this channel is here to do. I will see you in the next one.